Hi, in this video we will learn all about interest on loan which is borrowed by the firm from the partner, and also rent paid by the firm to the partner for premises let out by the partner to the firm. We'll begin with nature of these two items. Both the interest on loan and the rent paid to the partner are charged against profits, and therefore they are debited to the profit and loss account. Now, sometimes the profits will be given prior to the interest on loan and or rent. Now, in such a case, when you are bringing down the profits or preparing your profit and loss appropriation account, the profits that are brought down should be after subtracting the interest on loan and or the rent paid to partner. We will assume that the profit and loss account has been prepared. The given profits were brought down to the profit and loss account. These two charges were made, and only the balance profit has been transferred to the profit and loss appropriation account from the profit and loss account. So to conclude, where the net profits are given, which is prior to the interest on loan and rent paid to partner, subtract these two items and then prepare your profit and loss appropriation account and bring down the profits. Now let's understand what is the rate of interest at which the interest on loan will be paid by the firm to the partner. Now, the rate of interest on the loan is as per the agreement between the partners. Whatever has been agreed between the partners, that will be the rate of interest which is payable on the loan. However, in the absence of any information, as per the Partnership Act of 1932, interest on loan is payable at the rate of 6% per annum. For 1 year, 6% is the interest on loan which is payable. Now, when we looked into the journal entries which are specific to partnership firms, we learnt that where the interest on loan is payable, the journal entry is interest on loan debit to the partner's loan account. Now, why is this interest payable on loan credited to the partner's loan account and not to the partner's capital account? Anyway, it belongs to the partner, so why cannot we credit it to the partner's capital account? Why should it be credited only to the partner's loan account? There are two reasons for this. The first reason is, in the absence of information, interest on balance of partner's loan account has to be paid by the firm at the rate of 6% per annum, whereas no interest is payable on the capital of the partner. Now, if we recall absence of partnership deed, in the case of balance of loan amount, interest on loan at the rate of 6% per annum is payable, but no interest on capital is payable. Therefore, the unpaid amount of interest has to be only added to the loan amount and not to the partner's capital account. This is one reason. And the second reason is, at the time of dissolution of firm, balance of partner's loan is payable before refund of partner's capital balance. Now, dissolution of firm means winding up of the firm by selling off the assets and paying off the liabilities. Now there is a certain order in which the liability has to be paid off in the case of dissolution of the firm. The external liabilities are paid off first, and then the loan borrowed by the firm from the partner is second item, and only third comes partner's capital balance. So the interest on loan has to be added to the partner's loan and given second priority. If it's transferred to the credit of the partner's capital account, it will be given third priority, which is not okay. That is why the interest on loan is credited to the partner's loan account and not to the partner's capital account. So in this video we learnt about these two items, the charge examples. The first one was the interest on loan and the second one was the rent paid.